Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mobix Labs, Inc. annual report. Mobix Labs, Inc. market capitalization of $0 billion is materially smaller than most of its industry peers of roughly $27 billion. Mobix Labs, Inc. trades at a higher price-to-book ratio of 30.76 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 86% of total assets. This elevated debt level warrants heightened caution, as it may limit financial flexibility and increase risk during economic stress. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. Mobix Labs, Inc. offers a diverse range of products and services that cater to various industries. At its core, the company designs and develops components and systems for advanced wireless and wired connectivity, including radio frequency, RF, and switching technologies. The company's product offerings can be broadly categorized into 3 main areas: wireless system solutions, interconnect products, and active optical cables. Wireless system solutions include cutting-edge RF and millimeter wave, MWave, 5G communications technology, MWave imaging, software-defined radio, and custom RF integrated circuits. These innovative technologies are used in various markets such as consumer, commercial, industrial, automotive, medical, aerospace, military, defense, and others. In addition to wireless system solutions, Mobix Labs also provides interconnect products that include EMI filter inserts and filtered and non-filtered connectors. The company's True Zero active optical cables are another key product offering. With operations in the United States, China, the Czech Republic, and internationally, Mobix Labs has a global presence and serves a wide range of industries with its advanced connectivity solutions. The list of businesses and services provided by Mobix Labs includes wireless system solutions plus advanced RF and millimeter wave, MWave, 5G communications technology, plus MWave imaging plus software-defined radio plus custom RF integrated circuits interconnect products plus EMI filter inserts plus filtered and non-filtered connectors active optical cables, True Zero, components and systems for advanced wireless and wired connectivity, radio frequency RF, and switching technologies. While Mobix Labs, Inc.'s stock price has crashed by over 78% in the past year due to a series of concerning news events. The company's financial health is under scrutiny after it disclosed substantial doubt about its ability to continue as a going concern without securing new capital. This was further exacerbated by a lawsuit against investors who failed to deliver a promised $30 million investment, leading to a significant capital shortfall. Despite reporting revenue growth, Mobix Labs has continued to experience net losses, with the company's operating loss reaching $37.7 million in 2025. The company also identified material weaknesses in its internal control over financial reporting, which can erode investor confidence and lead to inaccuracies in financial reporting. Furthermore, insider stock sales have been made at a time when the company is facing financial difficulties. The number of outstanding shares for Mobix Labs has increased by 69.19% within a year, leading to share dilution that can further reduce the value of existing shares. These events collectively paint a picture of a company facing significant financial distress, liquidity concerns, and governance issues, which have led to the precipitous decline in its stock price over the past year. The primary drivers of revenue growth and decline can be identified through an analysis of the financial reports' extracted summaries. On the growth side, expansion into large and rapidly growing markets for higher performance communication technologies has been a significant contributor. Acquisitions of companies with existing revenue have also played a crucial role in driving revenue growth. Additionally, sales to Leidos Holdings, Inc., which accounted for 50% of net revenues, have contributed substantially to revenue growth. Furthermore, the company's services revenue has experienced a 609% increase in 2025 compared to 2024, driven by engineering services. The sale of Mobix IC products to OEMs and ODMs is also expected to contribute to revenue growth. On the other hand, the primary drivers of revenue decline include failure to achieve widespread market acceptance of products incorporating the company's technology, intense competition in semiconductor markets, consolidation or vertical integration of customers, dependence on a limited number of customers, and decrease in sales of AOX. The company's dependence on a limited number of customers is a significant risk factor for revenue decline. Intense competition in semiconductor markets also poses a threat to revenue growth. Overall, the analysis highlights the importance of diversifying customer base and staying competitive in the market to drive revenue growth and mitigate risks associated with revenue decline. The net income of the company underwent a mixed trend between 2024 and 2025. Initially, it decreased from -$46.4 million to -$37.7 million, indicating an improvement in losses. However, upon closer examination, there were instances where the loss increased by $723 from -$1,707 to -$2,430. On the other hand, net income also showed a significant increase of $960 from -$686 to $274. The profit margins of the company experienced a more consistent trend. Despite an initial lack of explicit information on page 13 and no change mentioned on page 15, it was revealed that the profit margins suffered due to unfavorable pricing for products and solutions in 2025. Nevertheless, the margins did show an increase from approximately 7.3% to around 10%. This improvement suggests that despite the challenges posed by pricing issues, the company was able to enhance its profitability over time. The company's financial performance indicates a lack of positive operating cash flow. According to the provided information, multiple pages confirm that the company is experiencing negative cash flows from operations for the foreseeable future. This is further supported by specific data points, including a negative operating cash flow of $37,693 on page 42. While there is mention of potential positive operating cash flow in 2025, the current situation remains one of negative cash flow, particularly in 2024. The company's financial health has undergone significant changes in terms of its debt level and interest expenses. A notable increase in total liabilities was observed, rising from $33,558 in 2024 to $37,449 in 2025. This growth is also reflected in the company's debt, which increased by 81% from $3,423,000 to $6,185,000. Furthermore, interest expenses have seen a substantial rise of 47%, increasing from an unspecified amount in 2024 to $743,000 in 2025. Additionally, accrued interest has experienced a significant jump of 122%, growing from $177,000 to $393,000. These changes indicate that the company is shouldering a greater financial burden, which may have implications for its future operations and profitability. The performance of various segments and regions can be gleaned from the extracted summaries. On a positive note, Communications segment saw significant growth with the launch of Smart Edge device on page 6. Additionally, Sensing and Detection is experiencing growing demand across multiple market areas, although specific metrics are not provided. In other industries, interconnect products have been successfully deployed in aerospace, military, defense, medical, and healthcare sectors. However, it appears that Sensing and Detection segment has underperformed, with no specific metrics mentioned to indicate its performance. Management is projecting a growth-oriented strategy for the company, focusing on scaling up its presence in large and rapidly growing markets for higher performance communication technologies. To achieve this, they intend to pursue acquisitions that will enhance their product portfolio and expand into new industries. This approach is expected to drive business growth and capital appreciation over dividends. However, management also acknowledges potential risks and challenges, including intense competition in the semiconductor industry, vulnerability to loss of key customers, and cybersecurity threats that could have material adverse consequences on operations or financial condition. Despite these concerns, they remain focused on regaining compliance with Nasdaq listing requirements and are prepared to incur operating losses and negative cash flows from operations for the foreseeable future if necessary. Management's strategy is centered around leveraging proprietary technology to scale growth of revenue, while also prioritizing capital appreciation over dividends. They expect significant material adverse consequences if Nasdaq delists their securities, but remain committed to pursuing their growth objectives despite these risks. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has purchased EMI Solutions, Raji Systems, Inc., and Mobix Labs, Inc. These acquisitions are significant as they demonstrate the company's commitment to growth and expansion. On the other hand, the company has also engaged in various divestiture activities. One notable example is the issuance of shares to investors in exchange for notes payable, which allowed the company to reduce its debt burden. Additionally, the sale of future trade receipts to unrelated buyers and the conversion of convertible notes into Class A common stock have helped the company manage its finances effectively. Furthermore, the company has also sold warrants on two separate occasions, once in July 2024 and again in April 2025. These sales demonstrate the company's ability to adapt to changing market conditions and optimize its financial position. Overall, these acquisitions and divestitures reflect the company's proactive approach to managing its growth and finances. Based on the extracted summaries, it appears that the company's financial strategy has focused on other areas rather than dividend payments. The company has explicitly stated that it will not pay dividends in the foreseeable future. While there is no clear information about share buybacks, it can be inferred that the company has engaged in some form of share repurchase through warrant issuances. This suggests that the company may have been interested in reducing its outstanding shares or increasing shareholder value through other means. Concerns about inventory buildup and supply chain disruption are present in the given summary. On page 18, several potential issues are mentioned that could lead to delays in production, volatility in prices and availability of materials, and dependence on single sources of supply. These risks include pandemics, political instability, economic changes, inflation, and geopolitical tensions. Additionally, there are mentions of inventory buildup on other pages, including a significant increase in raw materials from 2024 to 2025. However, these mentions do not necessarily indicate significant concerns about inventory buildup or supply chain disruption. The data provided suggests that while some issues may be present, they do not appear to be severe enough to cause major disruptions. That concludes the financial summary for Mobix Labs, Inc. Feel free to comment below, and I will be happy to answer them when possible.